A lot of us are aware that 2021 has been a big year for cryptocurrency. We've seen Bitcoin hit a new all-time high price as people's interest in crypto has skyrocketed this year. So much so that it's become a hot topic not only among investors, but in popular culture too. And some of us have begun to wonder, what's next? That's why in today's video, we'll be telling you how the market is changing and what experts think will happen. Understanding the evolution of crypto. The truth remains that in recent years, cryptocurrency and in particular Bitcoin has demonstrated its increasing value time and time again, and now it boasts about 14 million Bitcoins in circulation. Some of us, in our speculation on the future possibilities of this new technology, believe that cryptocurrency has driven most of the current market capitalization. We also believe that this is likely to remain the case until a certain measure of price stability and market acceptance is achieved. However, we have to admit that apart from the declared price of the cryptocurrency, those invested in it appear to be relying on a perceived inherent value of cryptocurrency, inclusive of the technology and network itself, the integrity of the cryptographic code, and the decentralized network as well. Current limitations of crypto. As amazing as cryptocurrency is, we can't deny the fact that the limitations on cryptocurrency have a major role to play in the strength and growth of cryptocurrency, which in turn affects the future assertions of crypto. First of all, Bitcoins are still not widely accepted. This is because Bitcoins are still only accepted by a very small group of online merchants. However popular this digital currency is, it's still not a widely accepted or universal legal tender. This makes it infeasible to completely rely on Bitcoins as a currency. Plus, there's also a possibility that governments might force merchants to not use Bitcoins to ensure that user transactions can be tracked. Then there's the problem of misplaced wallets. If a hard drive crashes or there's an unfortunate event of a virus corrupting data, Bitcoins have essentially been lost. There's nothing that can be done to recover it. These coins will be forever orphaned in the system, so a wealthy Bitcoin miner or investor can get bankrupt in literally seconds with no way or form of recovery. The coins the investor owned will also be permanently orphaned, just like that. The most common problem with cryptocurrency, however, is that the value of Bitcoins is constantly fluctuating according to demand. This constant fluctuation will cause Bitcoin accepting sites to continually change prices. This will in turn cause a lot of confusion if a refund for a product is being made. For example, if a t-shirt was initially bought for 1.5 BTC and returned a week later, should 1.5 BTC be returned even though the valuation has gone up, or should the new amount calculated according to current valuation be sent? Which currency should BTC be tied to when comparing valuation? These are still important questions that the Bitcoin community still has no consensus over. Now, we're well aware that Bitcoin was built in deflation, but we're not aware of how this might be a problem. Since the total number of Bitcoins is capped at 21 million, it will cause deflation. This is because each Bitcoin will be worth more and more as the total number of Bitcoins maxes out. This system is designed to reward early adopters since each Bitcoin will be valued higher with each passing day. The question of when to spend becomes important. This might cause spending surges, which will cause the Bitcoin economy to fluctuate very rapidly and unpredictably. Then there's the problem of regulations. Buffett also touched on this problem in his recent talk, saying, "It doesn't make sense. This thing is not regulated, it's not under control, it's not under the supervision of any United States Federal Reserve or any other central bank. I don't believe in this whole thing at all. I think it's going to implode." Basically telling us that even if we perfect the technology and get rid of all the problems of cryptocurrency we listed above, until the technology is adopted by federal governments and regulated, there will be increased risk of investing in this technology. And once there's a risk that cannot be fixed, but at the same time keeps growing somewhat exponentially, Bitcoin will never fully grow and reach its full potential. This is because other concerns with the technology are mostly logistical in nature. For example, changing protocols, which becomes necessary when the tech is being improved, can take quite a long time and interrupt the normal flow of operations. The relationship between regulatory bodies and cryptocurrency. To understand the future of crypto, we need to understand the current relationship between regulatory bodies and cryptocurrency. For the most part, we were extremely happy to hear that lawmakers in Washington, D.C. and across the world were working hard and fast to figure out how to establish innovative laws and guidelines to make cryptocurrency safer for investors and less appealing to cyber criminals. Probably because it's getting tiring hearing how criminals use this venture as a means means to further their unscrupulous acts. In a recent interview, Jeffrey Wang, head of the Americas at Amber Group, was recorded saying regulation is probably one of the biggest overhangs in the crypto industry globally, and we would very much welcome clear regulation. However, like most things with cryptocurrency, the regulation comes with hurdles. There are different agencies that may or may not have jurisdiction to oversee everything, says Wang, and it differs state by state. Influence of regulatory bodies on the future of cryptocurrency. It'll be silly for us to disregard the influence and effect of regulatory bodies on the cryptocurrency industry and more institutional buy-in from major companies. Taking a look at the positives first, recently proposed legislation claims it could make it easier for the IRS to find cases of tax evasion when it comes to crypto, though investors would need to already keep records of any capital gains or losses on their crypto assets. Still though, the new rules may also make it easier for investors to properly report any and all crypto transactions. Moving on, it would benefit you greatly to know that regulatory bodies will also affect the price of the cryptocurrency in already volatile markets. For those of us who aren't aware, market volatility is why investing experts recommend keeping any cryptocurrency investments to less than 5% of your total portfolio. Never invest anything you're not okay with losing. Ultimately, many experts believe regulation is a good thing for the industry. We kind of agree that we would prefer the term sensible legislation. Sensible regulation is a win for everyone, says Ben Wise, CEO and co-founder of CoinFlip, a cryptocurrency buying platform, and Crypto ATM network. It gives people more confidence in crypto, but I think it's something we have to take our time on and have to get it right. Futuristic assertions on crypto. It is our view that the cryptocurrency market will develop at a pace set by the participants. The crypto market is characterized by likely growth spurts of legitimacy from one or more of these participants in what traders and miners like to call credentialing moments. Now, for the market to even reach the next phase or stage in its evolution toward mainstream acceptance and stable expansion, each of the 5 key market participants, merchants and consumers, tech developers, investors, financial institutions, and regulators have to play their assigned role. Going further, we'll be using Bitcoin as our reference for cryptocurrency. You might be wondering why. It's simply because Bitcoin's a good indicator of the crypto market in general. After all, it's the largest cryptocurrency by market cap, and the rest of the market tends to follow its trends. Like we mentioned earlier, Bitcoin's price has taken a wild ride so far in 2021, from a high point of $60,000 in April to less than $30,000 as recently as July. More recently, Bitcoin has climbed back toward $50,000. Talk about volatility. This volatility in itself is a big part of why experts recommend keeping your crypto investments to less than 5% of your portfolio to begin with. Bill Noble, the chief technical analyst at Token Metrics, a cryptocurrency analytics platform, thinks the price of Bitcoin will climb throughout the rest of the year. I think it's more likely Bitcoin goes to $75,000 than $25,000, he says. Anyway, to the crux of the matter, the honest truth is this: we can speculate on what value cryptocurrency may have for investors in the coming months and years, and many will, but the reality still remains that it is still a new and speculative investment, without much history on which to base predictions. No matter what a given expert thinks or says, no one really knows. That's why it's important to only invest what you're prepared to lose and stick to more conventional investments for long-term wealth building. If you were to wake one morning to find that crypto has been banned from the developed nations and it became worthless, would you be okay? Frederick Stanield, a CFP with Lifewater Wealth Management in Atlanta, Georgia. Harvard University professor of economics and public policy Kenneth Rogoff suggests that the overwhelming sentiment among crypto advocates is that the total market capitalization of cryptocurrencies could explode over the next 5 years, rising to $5 to $10 trillion. Professor Rogoff strongly believes that the historic volatility of the asset class is no reason to panic. Still, he tempered his optimism and that of the crypto evangelicals view of Bitcoin as digital gold, calling it nutty, stating its long-term value is more likely to be $100 than $100,000. That's it, guys. We've come to the end of today's video. Thank you so much for watching. What are your expectations? What excites you the most? Bye, guys.